Good morning, everyone. Welcome. Thank you for making the time to join us today. My name's Penny Corner, and I'll be helping moderate the webinar today. Today, we're joined by Natasha from the Queensland Building and Construction Commission, and the purpose of the webinar today is to discuss the minimum financial requirements, including annual financial reports and how the functions of the auditing process. We'll also get a chance to discuss project trust accounts as well. Natasha is very well equipped to handle these topics as an MFR advisor for the QBCC, and Natasha's expertise follows a vast experience in assessing licensees who are at imminent risk of insolvency to ensure a financial, sustainable building industry in Queensland. If you have any questions throughout the sessions, please pop them into the chat and we'll come back to those at the end. But I'll hand over to Natasha now to provide a bit of an update and a presentation, and then we'll do the question and answers from that. Thanks, Natasha.
Thanks, Penny, and thanks, Summer. And thanks for having me. So as Penny mentioned, Natasha Dennis-Waller, I work for the Queensland Building and Construction Commission. I will provide just a very quick PowerPoint just to go through, probably more for my benefit than yours, so I stay on point and don't tend to dribble too much. But if you do have any questions along the way, as Penny said, throw them into the chat, and happy to try and discuss any pain points or suggestions or feedback that you may have, or answer any particular problems or concerns that you may also have with the requirements. So I can't see anyone now. Yes, Penny, can you just nod if you can see that?
So we can see it. It's sitting on slide 7, though. I don't know if you can go up to the top.
Yeah, the first was just the introduction and things like that. So that's all fine. I'll go just. I don't know if that has worked either, but oh, yes, it has. Can everyone see that now? Yes. So just a quick acknowledgement to country, to pay my respects to elders past, present and emerging, and acknowledge the traditional custodians of the lands that we are meeting on. Housekeeping we don't need to run through because we're all online, so that's all good. Just a very quick update, as Penny said, to project trust accounts. At the moment, they're for state government contracts 1 mil to 10 mil, private contracts or residential contracts 10 mil and over. There are the 2 trust accounts that are in place, so the general account and the retention account, and the retention account stays open until all funds are released through that project, so it could be a couple of years later. But the main point to run through on project trust accounts at this stage, the residential area for project trust accounts, the rollout for that has been delayed until at least 2025. 2 reasons for that. First one being that the software is not yet compatible to roll it out any further than what it has been, and also it needs a little bit more law reform around it before it gets rolled out into the residential market. So we're not sure what that looks like at this stage. As soon as we find anything out, we'll definitely flow that out to the industry, as I'm sure Penny will on behalf of the master plumbers. I just wanted to quickly touch on money's owed complaints. This isn't a new process, but it can be fairly successful. If you are owed money, if you're a subcontractor and you're owed money by a builder, and there is no dispute or anything like that to the payment, then please consider lodging a money's owed complaint through the process that QBCC has. I would say to anyone in the industry, you will work very, very hard for your money, so please make sure that you protect it. If you're not being paid, please put your hand up and we'll try and assist if we can. But what I am here today is to discuss the minimum financial requirements. So this one is the forte that I deal with on a daily basis. And essentially the MFR requirements are set up to ensure that the building industry in Queensland is financially sustainable. QBCC often gets criticised as to why we don't stop financial failures, liquidations and administrations or bankruptcies. That's not actually the role of QBCC. We can't stop an entity going into liquidation or administration. It's actually a director's duty if the entity is insolvent to place it into liquidation or administration. So we can't prevent that from happening. But what we can do is ensure or try and assist the process to ensure that the damage to the industry is minimised if there was to be a financial failure. So the analogy I would draw is that your QBCC licence is really no different to holding a car licence. Your QBCC licence allows you to trade within the building industry in Queensland. So when you have your car licence, you meet all these laws, like you do a test when you first start out to get your licence, and then there's all these laws in place around driving a car. So you've got to wear a seatbelt and you've got to go a speed limit and you can't talk on your phone. All of those laws are in place to minimise the damage if you were to have an accident. None of those laws are in place to prevent you or stop you from having an accident. So you can still have a car accident if you drive 10 kilometres an hour. If you're wearing a seatbelt, you might be a bit more safer. If you're not talking on your phone, you might be a bit more safer. So that's what the minimum financial requirements are in place for. It's exactly that. It's to ensure that we do have some mechanisms to reduce that, the damage of failure within the building industry, particularly through now the reintroduction of annual reporting. We receive financial information a lot more regularly than what we ever used to be able to do. So we can track concerns there and we can step in a lot earlier than what we ever could do. So if we do identify that a licensee has some kind of financial difficulties or concerns there, we will either we'll start some regulatory action and we'll either get them back into compliance and strengthen their business by doing that, or unfortunately they may need to sit out of the industry until such time as they are in a healthy position. So that's what the aim of the financial requirements are for the industry of within Queensland. What those requirements are made up of, you may hear your bookkeeper or your accountant sometimes talking about a current ratio or your net tangible assets. Your current ratio is essentially just ensuring that you've got enough cash or things that can be turned into cash to pay all the bills that you have. So within your current assets, you'll have things like work in progress that you've done for a homeowner or another builder, or you may have an invoice that you've issued to a homeowner but they haven't yet paid. That would be classed as a current asset because you can turn that into cash very quickly at any time. That would be enough to pay your debts. So your debts would be things like your bills to Bunnings or Reece or a supplier like that. So that's what your current ratio is made up of. Your net tangible assets is essentially your working capital. So if you sold all of your assets, everything that you possibly owned in the world, and you paid out all of the bills, all of your liabilities that you've ever owed anyone, what's left over is your current, is your working capital. So that's what your net tangible assets are. That works hand in hand with the maximum revenue that is set through QBCC. So your net tangible asset base or your working capital sets a ceiling that you're allowed to turn over based on that capital, on that working capital. So there's no point having working capital of $5 and you trying to turn over $50 million. There's a bit of a risk there. So you need enough working capital to ensure that you're doing that, or that can cover that turnover that you're doing. There is a big difference between the annual reporting submission and an MFR report. And this is where I would always say, and I say this to accountants every day as well, this is where I would say that our trade contractors, our subcontractors of the world are a lot more smarter than accountants sometimes, because we were actually asked by an accountant how often they have to do annual reporting. It is every year, annual reporting. It's an annual submission. It doesn't need to have accounting standards applied to it though. It doesn't need to be prepared by an accountant. It can literally be straight off your internal management account system, whatever system you use, whether that's QuickBook or Xero or MyOb. that can be lodged straight through the My QBCC portal, and that will then satisfy the annual reporting lodgement requirement. It is, as I said, it is every year. If you're in a category 1 to 7, excuse me, it is by 31 December each year. And if you're an SC1 or SC2 contractor, it is by 31 March each year. Sorry, I've just got a bit of a cough now. And it doesn't need an MFR report to be provided. So an MFR report is only required, which is that higher threshold. Oh, excuse me. And an MFR report's only required in very certain circumstances. If you upgrade your turnover, or I think I must have done too much talking already, Penny. If your business structure changes, or if for some reason we request it. So that's where an MFR report is required. And that's that higher threshold where it needs to be signed off by your accountant and can't be any older than 4 months. So, excuse me, annual reporting, the other difference between an MFR report, your annual reporting is based on your end of financial year. For very much most of our licensees, your financial year end date is 30 June each year. So that's the information that your annual reporting submission would be based on. The annual reporting does have those set due dates, 31 December, 31 March. Your annual reporting submission that you lodge each year doesn't change your maximum revenue. It doesn't change if you were sitting in an SC2 category of 800,000 maximum revenue. Your annual reporting submission won't update that. Only an MFR report will do that. You can provide the MFR reports at any time during the year. It's just that we don't necessarily need them unless you do need to do a change, like to your maximum revenue, or for some reason you were audited. Why do I need to give QBCC my financial information? It's definitely not for our entertainment purposes, I can tell you that. It is a legislative requirement, good, bad, or otherwise. It is part of a law that's in place. However, it does have some really good benefits to your business by looking at your turnover each year. You can use the information that you look at on a more regular basis to ensure that you've got your profit margins correctly, that you don't have excessive overheads, or you can cut back on some of your expenses. So it's a really good opportunity to have a look at your business at least once a year, and also obtain some advice from your accountant or your bookkeeper if you need to be able to identify those areas of growth, improvement, concerns, areas of concerns if you have them. So it can have positive effects for your business as well. Difference between not lodging your annual reports and not meeting the financial requirements. These two are very different and treated very differently. So the government gave QBCC a very clear message that it takes not lodging annual reporting very seriously. If you don't lodge by those due dates, you will get a couple of reminders, but if we still don't receive the lodgement after those reminders, it's likely that some regulatory action would be taken on your licence. Just also bear in mind that does have some ramifications on the public register. If QBCC was to suspend your licence for not lodging that information, that unfortunately stays on your public record for a period of 10 years. So it can have some ramifications on your licence register. If you don't meet the requirements, though, very different to not lodging. If you don't meet the requirements, you don't meet the minimum financial requirements, maybe you're a bit short, what we do with that is totally different. So we're a risk-based regulator. We will only ever take regulatory action on a licensee when we identify that there's a risk to do so. And by that, I'll give you some examples just quite quickly. Before we take regulatory action for failing to meet the financial requirements, we'll weigh up the risk to the industry of taking the action compared to the risk to the industry of not taking the action. So we'd look at the impact on all of the stakeholders, your employees, subcontractors, homeowners. We'll also identify or weigh up the seriousness of the breach. If you're short by $5, that's completely different to if you're short by $500,000, and our action would be totally different in proportion to that as well. We'll also look at whether or not we've told you a couple of times over the last couple of years that you may be short. And if you haven't done something about that, then we may lead out with a regulatory action. We'll look to see whether your position has improved or declined over that last couple of years. And we'll also look to see whether there are any other indicators that would heighten that risk for us, such as defective work or monies owed complaints. What we would also take into consideration is if we were to lead out with a regulatory action, what we'd be looking for from that licensee and or their accountant is that plan to come back into a positive financial position within a reasonable period of time. So we'd be looking at making some changes to your business to improve the financial position. That's something that you'd probably need to discuss with your accountant or some kind of professional advisor, but we would be looking for some money to come back into that entity because, again, what we're trying to achieve is that financially sustainable building industry. Oh, I think I skipped a few there. Yep. So some of the common issues that we see for annual reporting lodgements, if you lodge for an incorrect financial year end date, again, it's that 30 June financial year that we would be looking for your annual reporting lodgement. Missing signatures, you need to sign off on the form before you lodge it. Double up of submissions, we don't see so much of that anymore because the portal is locked down to be able to only accept one lodgement. But in previous years, we were getting the licensee would lodge their annual reporting submission and then the wife would say, well, there's no chance he would have remembered to do that, so I'll lodge it. And then the accountant goes, well, I'll lodge it because that's my job. At one point in time, we were getting 17 submissions for one licensee, all of them different, so we weren't really sure which one to look at. So we just asked that you only lodge it once. And as I said, the portal is locked down to be only able to lodge it once. If you do need to amend it, say you've lodged it and then your accountant has or your bookkeeper has realised that some figures may be needed to be amended, we can amend it at the back end. We just may not necessarily need to if there was actually no concerns that were identified. Trying to change your licence category outside of the annual reporting process, again, that's where your MFR report or other forms would come into place, not through the annual reporting process. Also trying to submit for an incorrect category. If you are in a category, let's say an SC or a category 3, you've got the turnover or maximum revenue of 30 million, but you're only actually turning over 800,000 and you want to lodge or you want to be in SC2, you still need to lodge for the category that you're in for annual reporting, and then you would change the licence category through that separate process. Changing your password has hopefully been made a little bit more simpler by QBCC, but you can always contact our contact centre to be able to change that. And also just confirming that your licence renewal doesn't alleviate the requirement to lodge for annual reporting. So your licence renewal these days is literally just that payment of a fee. And then I think this might be, no, second last slide, I think. Your actual revenue, that's what you need to report on. It's not just your income in Queensland and not just your income in the building and construction industry. The reason for the actual revenue being all of the turnover is in case another part of your business that wasn't part of construction had some issues that may flow into that construction arm. Probably the best example I would give to that is if you were running a pest control business and a carpet cleaning business all within the same company. Your pest control part of that needs to have the QBCC licence. Obviously, your carpet cleaning doesn't. Let's say your carpet cleaning is down by income, you're not getting the amount of jobs that you were predominantly getting for carpet cleaning, and you are short of cash flow. What we don't want to see is that delving into your pest control part of that and causing issues for the creditors within that part. So that's the reason that all income is included in your reporting to QBCC. And then I was just going to quickly cover off on trust structures. QBCC doesn't license trusts, and the reason for that is the trust isn't the legal entity. It can't be sued. It's the trading entity, but it's not the legal entity. Usually it's a corporate entity, being a company, Pty Ltd. The trust is there to essentially protect the assets. And again, if we're looking at a financially sustainable building industry, we need to see that the assets are held by that licensee, not protected in a trust. So that's why we would need to see that the trustee or the Pty Ltd, the company entity, has sufficient assets in its own right, or needs to rely on a deed from a director to be able to meet the requirements of holding the license. That was all I was planning on running through today, Penny. I know that was very quick, but I was hoping to get to some questions and answers if anyone has any, or any pain points or suggestions that you want me to take on board and try and get things improved at our end. We're definitely always welcome to that. It's something that I've been trying to work pretty hard with Penny and Summer on over the last 12 months, 18 months or so, but definitely happy to take your feedback or answer any questions if you've got any.
Yeah, thanks, Natasha, for providing that update. I think it's really useful just for information. Probably the biggest query we get is, and you touched on it just at the end, in relation to the trust accounts. So people want to change categories because they've gone over in their turnover and they can't change because of the structure of the trust. And then they may get correspondence from QBCC about what to do. So I suppose, yeah, what if a member does get communication from QBCC, a letter, what should they do? Because I find a lot of the times people they don't want to deal with it. They bury their head in the sand and like, I just can't deal with this. There's another thing on top of everything else that I'm trying to juggle. So what sort of advice would you give to them? And around the trust structure, how can they sort of best handle those situations as well?
So unfortunately, and I would use the word unfortunately, the law at the moment states that only categories 1 to 7 can rely on a deed of covenant and assurance from a director. So if you are set up in a trust structure and you've been working as an SC1 or an SC2, it may be likely that you would need to bump up to a category 1 to be able to meet those requirements. That's something that we have agitated with the Department of Energy and Public Works, who essentially write our laws, to try and get that changed where SC1 and SC2s can rely on a deed. We don't necessarily think that it's overly fair that an SC1 licensee needs to bump up to a category 1. So if you do have any feedback like that, please raise that through Penny, who may be able to also agitate that to the department. But what I would suggest is if you do receive correspondence from QBCC in relation to the minimum financial requirements, just that particular part, I'm happy to be able to offer my services, my expertise, to be able to try and step through that process with you and break that down a little bit more to help you understand that process in a way that makes it beneficial for both of us. The process is not designed to be difficult, but sometimes you do need, I guess, that inside knowledge to help you step through that process. And I'm definitely happy to offer that assistance if you need it.
That'd be great, because I think sometimes people read it and they get a bit overwhelmed and they don't really know how to deal with the next steps from there. So I think that's great.
Short of that, if it's got a time limit on it, and most of the time, we do like to step through things pretty quickly so that they're not outstanding for a fair while. If you've got a time limit, and let's say it's 14 days, please don't leave it until the 13th day. As soon as you get it, if you're not sure, either contact your bookkeeper, contact your accountant, or contact me through Penny, or vice versa, and step through that process as soon as you get it, because then that gives you enough time to allow the outcome to happen. When you leave it until the very last minute, it becomes a little bit more difficult sometimes.
Yeah, understand. Or alternatively, they could maybe, once they get the letter, ask for an extension just to give them some more time to able to understand and process it.
100%.
Okay. So Kelly's put a question in the chat here, and it says, "Hi, not sure if this is something you can answer. However, our accountants have asked if you require financials to be completed on a special purpose basis or a general purpose basis."
That is a great question, Kelly. And Summer, can you just nod? Is this being recorded? I will say it in the recording because I've already said it before numerous times already. At the moment, unfortunately, and Kelly, I'm not sure if you're referring to the annual reporting requirement or if you were needed or required to provide an MFR report. For annual reporting, it's definitely not general purpose. And just a very quick explanation, general purpose has massive disclosures to it and can be quite costly. Your special purpose is still your signed financial statements and has some rigor around it, but not to the degree of general purpose. And I won't go into too much detail on that. With your annual reporting submissions, it can be literally your internal management accounts. If you're category 1 to 3, that hasn't changed and won't change. If you are requiring to provide an MFR report at the moment, unfortunately, it does need to be based on general purpose. We have agitated a change, as has the industry, as has the accounting bodies, to the Department of Energy and Public Works to get that changed. What I would suggest to you is have a chat to your accountant, maybe hold off as long as you can until probably the end of August. Because hopefully that change will have come through the department and changed the legislation. So you'd still be able to provide 30 June information, but you could then revert back to special purpose. Your accountant still has until the 31st of October to be able to sign that off. So if you just hang for a few more weeks, hopefully there might be a change to the law over the next month. We are still hoping for that.
Oh, that's fine.
Did that make sense, Kelly?
Yes, it does.
Okay.
Only I was speaking to our accountant about it, and she'd heard somewhere along the grapevine that it had all changed to general purpose, not like the MFR in the annual reporting.
No.
So we've just done
unless your turnover is 30 mil and over. If your turnover is under that 30 mil, so you're below a category 4. Yep. You can provide either special purpose or internal management accounts for annual reporting.
That's good. And we did our MFR and dropped that last year because we were in some ridiculous category. So that's fine. Because she said they don't prepare on a general purpose basis.
There's a lot that don't.
That won't. And so that puts a lot of us in a big issue because we have to change accountants to then get it done on a general purpose basis if we need to. And when you're only a small trader, with $2 million turnover, it's a big deal. So
it is an absolute massive pain point in the industry at the moment. It is something that even QBCC identifies that it's a massive pain point. It's a pain point for us. That's the reason that we've raised it with government. Accounting bodies have raised it with government and industry have raised it with government. So we are still hoping for that change in the next couple of weeks. But if you're category 1 to 3, internal management accounts is the minimum for your annual reporting. You'll never need to provide general purpose.
Excellent.
If you're a that's good. If you're a category 4 and above, unfortunately, you're big. There's risk there. You'll need to provide general purpose.
Don't want to go category 4. That's no worries.
Excellent.
Thank you very much. That's great.
No problems. If you are, and it's only if you are speaking to your accountant in the next, couple of weeks, maybe before the end of August, just get them to touch base with us and we'll let them know if that has changed. But as I've said to everyone, if and when it does get changed, you won't need to go and hunt for that information. Yeah. Penny will hear me from my rooftop. I will scream it.
We'll be sharing it out, telling everybody.
Yeah. And I think just from what they tell me, there's a lot of grey areas they don't understand either, the accountants. And there's so many accountants that they can't, a lot of them don't deal with a lot of construction industry clients, and so there's a lot of questions there.
And Kelly, that's the exact reason that my role now is more of an advisor in that, because me and my team see this every day, day in, day out. If your accountant is only dealing with this, or perhaps you as a licensee is only dealing with this once a year, we get that you're not meant to know it the way we know it. That's why we need to offer that support and that assistance. Yep. So if your accountant is ever not sure of anything, please get them to reach out. I'd much prefer that we're on the same page than going, I've lodged that 5 times and I still can't get a clear answer. That's wasting your time, their time, our time. Let's make sure that we all understand it. Make it nice and easy.
Okay, that sounds good. Thank you very much for that.
No problem.
Yeah, really good question, Kelly. And yeah, if your accountant needs to reach out to Natasha, we can obviously connect you as well. So that's fine.
Happy to do that.
No worries.
The next question is from Hydroco. We've got, hi Natasha, does subsidies from government for apprentices, etc., do we need to count this into our turnover, or do we just need to report this?
You need to count it in your turnover if it is income that you've received.
Yeah.
Any grants, or essentially any income.
Yeah. Any income, you need to declare it in as turnover. Yeah.
Yeah.
Okay.
If it does push you over the threshold for your maximum revenue, and let's say it was a one-off, you can definitely put a submission to QBCC to that effect. I guess the best example I would give is if you were a sole trader, not a company, and you've sold your house. That is included in your turnover, in your income. You've sold your house, you've received the profits from that. Obviously, you're not going to sell your house. Well, I don't think you would. I don't think you'd sell a house every year that you owned. So that would be a one-off situation that we could consider.
Okay, that makes sense. Okay, we've got another question here from Corey. He says, hi, Natasha. Following on from Kelly's question, we're a Category 4 business. Long story. However, our annual turnover for 2022 financial year and 2023 financial year will be less than 30 million for annual reporting disclosures. Are we required to prepare our financial report on general purpose basis this year? I'm having a back and forth with our accountant. Thanks.
That is a great question, Corey. And I'll answer that in a short way and a long way. Short way is, unfortunately, yes, you would need to lodge your annual reporting information based on general purpose. That's the short answer. That's very painful. What I would say, though, is if you don't think your turnover is going to be over that 30 mil anymore, maybe have a look, or first off, have a chat to your accountant and see if you can hold off for that 4 weeks or so, hopefully sooner. Hopefully the law will change and we revert back to special purpose. Then what I would suggest is that you have a chat to your accountant, use your 30 June information based on special purpose, downgrade your turnover to a Category 3 or below. Then you would stay in that Category 3 company or Category 2, whatever. I'm not sure what your turnover is, but other than less than 30 mil, then you don't need to provide general purpose for annual reporting or for that MFR report, if that makes sense. With your back and forth with your accountant, again, I'm happy to be a party to that discussion if they need any assistance for that. And hopefully both of those answers made some sense.
Okay, great. Thanks, Natasha. Yeah, Corey's good. So they're all the questions that we've got so far that have come up in the chat. Nick or Mitch, I know you guys are online as well. Did you have any questions that you wanted to ask Natasha, or any queries or concerns?
All good, thanks.
No, Mitch is fine. I just thought it was a good opportunity to check. All right. Did you have any other information, Natasha, that you wanted to share?
No, other than the project trust account will let, I'm sure once we get told the information, master plumbers will also get told the information about the same time. Again, hopefully there will be a lot of consultation before that does get rolled out to the residential area over the next couple of years. And then, as I said, we will definitely confirm as soon as we know any change from general purpose back to special purpose. We'll definitely let people know that. But again, Category 1 to 3s, hopefully they will be able to revert back to special purpose. Category 4 to 7s, unfortunately, you are looking at the world of general purpose moving forward forever. If like Corey, you are sitting in that Category 4 to 7 and you need to decrease, probably now's your time to do it using 30 June.
Yeah. Okay, great. All right. Well, we might wrap up a bit early. So on behalf of the association, we'd like to say thank you to Natasha for giving up your time and sharing the information today.
Absolutely, anytime.
Yeah, thank you to those that have joined online, and obviously we'll be circulating this out to members so they can access it in their own time as well to be able to watch it. And if there's any other questions that anyone has following that, please reach out to Summer or I, and we'll connect you through with Natasha as well.
That'd be great.
But yeah, thank you, Summer. Thanks, Natasha. And we'll
Thanks,
see you
Penny.
all
Thanks,
again
Summer.
next time. Have a great day. Thank you, everyone.
Thanks, everyone.
Bye.
Bye.